Greetings, everyone. This is Payroll Accounting, the Cengage text, and this lecture is covering Chapter 2 as we look into how wages and salaries are computed. Now, we touched on the Fair Labor Standards Act in Chapter 1 as an overview. But this week we're going to delve into it a little deeper, and we're going to talk about two types of coverage. Enterprise coverage includes employees if two or more are working in interstate commerce or produce goods for interstate commerce between states, and the business has at least $500,000 of annual gross sales. So these guidelines are concerning companies that fit into that category. And many nonprofits, no matter what the annual sales volume, would be covered in this grouping. Individual employee coverage would include employment in a fringe occupation closely related or directly essential to the production of goods for interstate commerce. And even though they don't meet that enterprise test in the first one, it has to pay Fair Labor Standard Act wages to those workers eligible for individual coverage. So an employer is an individual who acts directly or indirectly in the interest of an employer in relation to an employee. So it's kind of broad. An individual is an employee if the individual performs services in a covered employment. And the way it gets determined, because this happens a lot, employers will say, well, they really weren't an employee, they're subcontracted. But an individual is an employee if the individual performs services for opportunity for profit and loss, investments by worker or employer, permanence of the work relationship, nature and degree of control over the work being performed. Now, this is a huge one. Does the employer say when you're going to work, how you're going to perform your job, what materials you're using? When they have that kind of control over it, you're generally an employee. Centrality to work to the business of the employer, and how much workers can use their skill and initiative. Generally speaking, most people are employees if the employer can guide and control when, how, where, and what you're doing for work. Specific rules apply to employees of corporations, domestic workers, interns, partners in partnerships, and statutory employees. Now, a statutory non-employee, those that would not be considered an employee, that would be considered self-employed, would be direct sellers and licensed real estate agents. Usually always the licensed real estate agents and the direct sellers are going to be contract workers. So no, for income tax or federal tax purposes, they are clearly self-employed individuals. Now, domestic help would be help in your home: cooks, butlers, caretakers, gardeners, chauffeurs. And babysitters or nannies are also considered a domestic employee if they are working consistently. These employees must earn minimum wage if they work 8 hours or more per work week in one or more homes, or earn at least $2,700 from an employer in a calendar year. Live-in domestic help does not need to be paid overtime. So guys, don't get bogged down with so many details, because there's so many rules and so many details. But no, you'll be able to use your text, to use notes, to look at all the details. There's a lot to cover here, but don't let the detail overwhelm you. Direct care workers, such as those that are caring for disabled or elderly, are subject to minimum wage and overtime rules if they're employed by a third-party employer. So that is not a direct domestic help. This is an outside employment situation. Then you are considered a worker that is due to be paid minimum wage and overtime. Now, what is minimum wage? You can include commissions, earned bonuses, severance, on-call, shift and weekend differentials. That is all the ways in which you can be paid. A discretionary bonus is one which is not agreed upon or promised ahead of time, would not be included in regular pay. Only the non-discretionary is included in regular pay. So if I decide someone did a great job and I give them $300, that is a discretionary bonus. We didn't agree upon that. I was just giving them that as extra. Other types of compensation that are not included in regular pay are gifts made as a reward for service, payments for a profit sharing plan, vacation pay, holiday pay, sick pay, jury pay. So in that case, no work is being performed, but they're receiving a payment. That is not included in regular pay. Guaranteed minimum number of hours paid that are more than the actual hours worked is not regular pay. Any types of allowances would not be part of regular pay. Sign-in, longevity, callback pay, those are not regular pay. And then benefits like gym benefits or parking benefits, that would also not be considered regular pay for an employee. The current minimum wage from a federal standpoint is $7.25 per hour. Now, there are exceptions to everything, and then I know in the state of Minnesota or in the city of Minneapolis, the minimum wage, I believe, is $18 an hour. It might be, and I'll check that, but they have different rules. Now, no, training wages of $4.25 per hour for the first consecutive 90 days of employment if an employee is newly hired and is under 20 years old. Higher ed and retail establishments and farms can employ full-time students at 85% of minimum wage. And for real detail, you can go to your ebook and see all of the exceptions. Situations where wages are higher than federal minimum have to be paid. Employees of federal contractors must be paid a minimum of $17.20 an hour. and contractors may no longer credit employee tips toward minimum wage. So when an employee receives tips, the employer cannot try to use those monies toward the minimum wage limit. And again, many states have higher minimum wages than the federal $7.25 per hour. And if that's the case, then the state wage needs to be used, the state minimum wage. Again, states have various guidelines. It looks like Alabama, Louisiana, Mississippi, South Carolina, and Tennessee do not. Some states have created multiple rates based on region, employer size, and for urban versus non-urban counties. A living wage shows that local laws can vary between cities, and they're basically trying to help those lower income employees pay their bills. 100+ cities have local laws requiring employees that do business with the government to pay a calculated living wage. And some states aren't just dealing with those that work for the government, they're including private industry. A tipped employee usually receives more than $30 per month in tips. Minimum tipped wage is $2.13 per hour. So tip credit that employer may take is $5.12 per hour. Again, each state has different guidelines. So in this case, for a tipped employee, the employee must make at least $7.25 per hour when they combine the tips and wages together, so they get the $290 minimum weekly gross. Again, that tip credit remains the $5.12 per hour, also for overtime pay calculations. So, in 2024, the minimum wage for tipped employees of federal contractors was set at $17.20 per hour without any offsetting tip credit. Here's an example. Raquel works 47 hours at Christchurch Bar as a tipped employee. She averages $750 in tips per week. If her employer takes the maximum tip credit of $5.12 per hour, Raquel's gross pay is calculated at the 40 hours at $2.13 plus 7 hours at the $10.88 minus the $5.12, or $125.52. For overtime minimum wage, you would take that $7.25 times 1.5 times earnings to know that the overtime minimum wage in this scenario would be $10.88 per hour. Now, let's look at an example here in a 40-hour work week. The tips that were reported are $43. So 40 hours at $2.13, the minimum tipped wage, plus the $43 has to be greater than $290. Now, in this case, it's not greater than $290. So the employer has to pay at least $290 for a 40-hour work week. So in that case, you take the $290, which is required to be paid, minus the reported tips of $43, and the employer is going to have to come up with the $247. In scenario 2, the reported tips are $11.89. Now in that case, the $85, the $213 minimum wage at 40 hours, plus the reported tips of $11.89 is definitely greater than $290. So in that scenario, the employer only has to pay the $213 per hour. It says here, states tip credit percentages may differ from federal law. And guys, there are just so many different rules, but oftentimes the employees have to share the tips. So that's changes the whole scenario. Because if they're having to share the tips with the hostess or the host, bartenders, dishwashers, then it changes it. Service charges cannot count toward a tip credit. These are considered wages subject to withholding. If 75% or more of employees agree, the employer and the IRS can determine a tip rate for employers' various occupations. Then what happens, the employees have to report those tips over the predetermined rate. And then if the employee isn't reporting them, then the employer has to report any employee who violates the rules. In cases of 2 jobs performed by 1 worker, tip credit is only applied to the job that qualifies as a tipped employment. So there are many jobs that don't have tips as their standard, but this only applies, you figure out the tipped guidelines only for those who primarily receive tips as a part of their job. So how is a work week determined? Well, it must be 7 consecutive 24-hour periods, which equals 168 hours. So however a company wants to determine when it begins and when it ends, it doesn't necessarily need to begin on a Sunday or end on a Saturday. However they determine it, but it has to be a 7 consecutive 24-hour period. If the state's overtime rule is more generous than the FLSA's, then we enforce the state law. The FLSA sets overtime at 1.5 times the regular pay. If the hourly rate employees work in a pay period or 2 weeks is longer, employers can choose to give employees 1.5 hours off for each overtime hour. But the key with that is it's got to be in that equal pay period. So if the pay period begins on January 1st and ends on January 14th, this scenario has to apply during that pay period, the 1st through the 14th. Employers can require employees to work overtime. And if they choose not to, they can be terminated. There are some exceptions. Hospital employees. Overtime for 80 plus hours in 14 days or over 8 hours in any workday, whichever's greater. Retail or service industry employees, if their regular weekly pay rate, including commissions, is $10.88 or more, or employees that receive remedial education. So generally speaking, as a whole, but there are exceptions, if an employer needs someone to work overtime and the employee refuses, they can be terminated. Compensatory time off. In certain situations, employers may grant employees compensatory time off in lieu of overtime. So what that means is instead of paying them overtime, they're allowed time off. A state or its political subdivisions or interstate government agencies grant compensatory time off. Employees in public safety, emergency response, or seasonal activities can accumulate 320 hours at 1.5 times the rate, or 480 hours of compensatory time off. Employees whose work doesn't include activities from the exception can accumulate 160 hours at 1.5 or 240 hours compensatory time instead of overtime. The FLSA allows for payment of cash for unused comp time when an employee chooses to remove himself from the company, then they need to make up for what they're due. So there are exemptions from all these rules. White-collar workers are exempt, meaning if you're an executive, an administrator, professional, business owner, highly compensated employee, computer professionals, creative professionals, or outside salespeople, you don't need to be paid time and a half for your work. They need to be paid at least $684 per week, and they have to be a salaried worker, which is not an hourly worker. They get paid on a monthly basis. A proportionate share of exempt employees' salary for time actually worked is only allowed on employees' first and last week of employment. Blue-collar workers are known as manual workers. They will always be entitled to overtime pay. So police officers, medical techs, firefighters, paramedics, licensed practical nurses are all allowed overtime. Now, they may be salaried employees, but they're still allowed overtime because we consider them manual workers. Here is a chart that shows those that are exempt from these guidelines. Executive, administrative, professional, business owners, those that are highly compensated, which means they earn $107,000 or more in a year, and they perform non-manual work. Computer for professionals, creative professionals, and outside sales are exempt from these rules. Now, Equal Pay Act, boy, this has gotten a lot of litigation. But basically, men and women that are performing the same work should be paid the same pay. This applies to employers having workers subject to the minimum pay provisions of the wage and hour law, and it applies to white-collar workers also. It prohibits discrimination by paying wages to employees of one sex at a lower rate than those of the opposite sex. So this has come into play because, generally speaking, males were paid at a higher rate than females doing the same job. So that is why this law has come into play. And basically, what they're saying is it shouldn't matter on sex, it should matter on the skill we are doing. So it's unlawful to not pay people the exact same job, depending if you're male or female, the same amount. Child labor laws. Their guidelines, if a person is under the age of 18, how they can work. Farming has a different set of rules, but those that are not farming occupations, employees that are age 16 and 17 may work an unlimited number of hours each week in jobs that are not considered hazardous or unsafe. Those that are 14 and 15 years old are limited to employment in retail, food service, and gasoline service with very specific conditions that have to be related to hours. Often it's the number of hours in a day. It's the time of day that they can work until. Agricultural occupations are a little different. If they're under 12 years of age, they're usually prohibited from working, and there can be conditions attached. Children aged 10 and 11 can hand harvest after school hours only for June 1st through October 15th. Employer needs to have certificate of age, which shows that the minor has reached the certain guideline. Child labor laws are there to protect children. And you hear often that products that are made overseas don't have these child labor laws, which is oftentimes why people are against other companies manufacturing products, because they use children to what they feel is an excess. In the United States, we definitely have child labor laws to protect children. Wage theft and penalties. Employees have recourse when their employer didn't pay them. Well, they should. They have 2 years to sue for back pay or mistakes. And if it's willful, they have 3 years. Willful is intentional. The government can bring civil or criminal suits against the employers who violate these rules. Penalties can result from misclassifying workers, willfully violating wage and hour provisions, giving them false data. My daughter works for the city of Minneapolis, and this is what she does. It's like a civil rights type of job where they may receive complaints from employees in the city where their employers have not given them what is due them. Usually, most employers will correct it immediately. But she was just telling me yesterday of a situation where it was a contractor through the state who received the money but didn't pay his employees. So he's in court right now. Not a good thing. What does the FLSA not cover? Employers are not required to pay extra on weekends or holiday, although many employers do. They're not required to. They're not required to pay for holidays, vacations, or severance. And the limit number of hours of work for persons under 16 years of age or over, they don't talk about that. They're not required to give holidays off or grant vacation time or grant sick leave. Those are not rules the FLSA chooses to cover. So guys, here we have this one. Indigine Systems follows the rules and regulations laid in the Fair Labor Standards Act of 1938 and makes the wage payment as per the Fair Minimum Wage Act of 2007. The company is facing exceptionally high workloads, and this requires its workers to work more than 40 hours in a work week. The management of the company is seeking advice on the overtime hours and overtime pay, and it wants to know if there are any exceptions to overtime provisions. Help the management of the company by explaining the rules. Well, we know overtime pay is over 40 hours in a work week, and they require no overtime pay for daily hours worked in excess of any given number or for work on Saturdays, Sundays, holidays, or other special days. And the law requires overtime pay to be 1.5 times the employee's regular hourly rate. Okay. Payment for the overtime work must be paid on a regular payday for the time period in which the overtime took place. Hospital employees don't have to work overtime. And employees in retail or service industries are exempt from the overtime provision as long as their regular weekly rate of pay is at least 1.5 times the federal minimum wage rate and more than half of their pay over a monthly period comes from commissions. So there are these exceptions to all these rules. So what is work time? Principal activities that require exertion and are required by the employer and for the employer's benefit. Preparation at the workstation, and it could be changing clothing if you need a specific type of clothing for work. It could include travel. It can include idle time and wait time. It allows for rest periods, and you're allowed to have breaks, and you can't make an employee check out because they're on a break time. Bona fide meal period, unless employee must perform the same tasks while eating for generally 30 minutes or longer. Work at home for the non-exempt employees, even if not told to take work home. Employers should have clear statement and policy manual on email work outside of the clocked hours. Sleep time, if required to be on duty, less than 24 hours. Training sessions and waiting for doctor's appointments on employers' premises. So all of these items are part of their work. What is non-compensated, not paid for? Preliminary and post-preliminary activities. Portal to Portal Act defines what these are. They're not counted unless they're customary. Checking in or checking out of a plant. So you park, you're walking into the plant, that is not paid. You're not required to pay for absences due to illness. If someone's tardy, you're not required to pay for the time that they weren't there. Now, employees must be paid for fractional parts of an hour. So, someone shows up at 8:10. There are guidelines as to how much an employee needs to be paid. George, an employee of an information technology company, undergoes on-the-job training during the regular working hours. Some additional training sessions are scheduled outside regular working hours. Which of the following can be considered as part of George's working time? Well, it's going to be working time includes the time spent with employees and attending lectures and meetings. Time spent in training sessions need not be counted as working time if all of these conditions are met. Now, do you see the key here? The attendance was voluntary. The employee does not produce any goods or perform any other productive work during the meeting or lecture. The meeting or lecture takes place outside regular working hours, and it's not directly related to the employee's work. If all of those are true, then it's not part of working time. But if one is true, so let's say attendance by the employee is required, well then it's working time. The FLSA requires certain time and pay periods be kept. Timesheets or time cards are essential. Oftentimes, computerized time and attendance recording systems are utilized. Nowadays, we've got, you can walk into an office and put your finger on a pad, and that keeps track of your time. So there are all kinds of methods now that allow computerized techniques. Okay. When we talk about computing wages, you can be paid weekly, which there are 52 weeks in a year, bi-weekly, which is very common, 26 times, semi-monthly, twice a month, or monthly. Very different pay periods for different groups. When we calculate pay, we calculate 40 hours at the employee's rate. Overtime is going to be calculated and multiplied by those hours in excess of 40 hours, which gives the overtime pay. Now there's an overtime premium approach where you can calculate the gross pay, and then you calculate an overtime premium in excess of the 40 hours at the overtime premium rate. Employers can calculate overtime in 3 ways. You pay the overtime at the higher rate, you calculate the total earnings for all jobs divided by total hours worked, and then you take a half of that rate and multiply it by the overtime hours. Or you use an overtime rate based on the rate for the job performed after the 40th hour. Oshiko worked for Tinto Incorporated in 2 capacities. Job A paid $14.50 per hour, and he did that job for 37 hours. And then job B paid $11 per hour, and he did that job for 6 hours. So the overtime, because he worked more than 40 hours, is 3 hours. So what he does is you take the regular pay, which is the $602, and then you take the overtime on the higher rate. So you figure out the hours, but then the overtime is going to always be based on that higher pay. What if Oshiko worked for Tinto? 1 job? Oh, this is the same one here. Another method is you start with the regular pay of $602.50. You divide that by 43 hours, and you come up with a regular rate, and then you do overtime on that average. Okay, that's another way to do it. And then the third way, you can take it on the job B rate. No, people aren't going to be happy with that third method. But depending on your employer, you can do it. I generally see that method 1 occurring. Steps that convert wage rates to hourly rates. You take the salary over a year period, and you determine the weekly gross divided by 52 weeks. You calculate the hourly pay, and then from there you can figure out the overtime rate because you take the hourly pay times 1.5. So, salary quoted to Farron, a non-exempt employee, is $1,500 a month. He's paid weekly, and he has 43 hours in one pay period. So you take the $1,500 times 12, which gives you an $18,000 annual salary. You divide that by 52 weeks. 52 weeks in a year is $346.15 weekly. You divide that by 40 hours to come up with the regular rate, and you multiply that times 1.5. That would be the overtime rate. So he gets the $346 plus he gets those 3 hours of overtime. $12.98 would be the overtime rate. In this case, a $2,000 per month pay, and she had 4 hours of overtime. You do it the same way. You multiply it times 12 to come up with an annual, divide it by but she's paid semi-monthly. So you multiply it times 12, you divide that by 24, which is twice a month, and basically come up with the overtime rate in that fashion. Salary quoted Zai, a non-exempt employee, $2,200 per month. She's paid bi-weekly and worked 11.5 hours overtime. We'll take that $2,200 times 12. We divide that by 26 pay periods, which is the bi-weekly rate of $1,015, or basically weekly rate is $507.69. You divide that by 40 hours to come up with her overtime pay would be the $1,269 times 1.5 to come up with the extra 11.5 hours for overtime. So Jennifer worked at 2 different pay rates during the past week. Her main job paid $25 per hour, while the extra job rate was $20 per hour. She worked 35 hours at the main job and 10 hours at the extra job. What is the overtime rate that needs to be paid to Jennifer? So one could pay it at the higher rate, or one could calculate it by taking the total earnings for both jobs and dividing it by the hours worked, so averaging it and then paying 1.5 times that rate, or one could use an overtime rate based on the job performed after the 40th hour. The lower rate. Not as good. So for non-exempt employees, salary quoted to Felicia, a non-exempt employee, is $1,600 per month for 35 hours a work week, paid semi-monthly. Overtime is calculated at regular hourly pay between 35 to 40 hours per week, 1.5 after 40 hours of 40 hours. Of 16 hours of overtime in one pay period, 6 hours are over 40 hours weekly. Oopsie. So you see here, we come up with the gross pay, and then to come up with the semi-monthly rate would be $800 a month, but weekly it's $369.23. After her 35 hours, the overtime rate, because her hourly rate is $10.55 because she works 35 hours a week. So her overtime rate would be $15.83 of overtime. Now you don't pay overtime of the 1.5 times until you hit 40 hours. So those first hours she would they would not be required to pay the overtime rate. And then the remaining 6 hours, which were over the 40-hour weekly, would be required to have the 1.5 times. Employers may pay employees who work fluctuating schedules a fixed salary, regardless of how many hours are worked. There's an extra 0.5 overtime premium is paid for all hours worked over 40, or they can divide fixed salary by 40 hours, which then gives a different pay rate each week. For fluctuating work weeks, there's a bellow plan. This is when they're really an irregular schedule. Guaranteed compensation cannot be for more than 60 hours. And you would calculate the salary as a wage rate multiplied by maximum number of hours, and then you add that 50% for overtime. Again, this needs to be agreed upon. Often there's a piecemeal rate based on output. So no, again, this is determined by units produced times the unit piece rate. And you come up with regular earnings, figure the total hours, and you get up with an hourly rate. So that hourly rate times 0.5 is going to be the overtime premium, or the overtime rate would be the hourly rate times 1.5. So no, that's a method. Or the method B, the units produced in 40 hours at the piece rate, times the units produced in overtime at the 1.5 piece rate, can be the gross pay. 4,812 units inspected in a 47.25 hour week. 600 of those units were produced in extra hours, and he's paid 12 cents per unit. So calculate gross pay using both rates. You take the 48.12 times the 12 cents is $577.44 regular earnings. You take that $577.44, divide that by the number of hours he worked, and you come up with an hourly rate of 12.22 hours. If you take a half of that 12.22, that would be what's called the overtime premium. So he should be eligible to receive the $577 plus that overtime premium of $6.11 of the 7.25 hours he went over 44 hours. Or another way to do it is you take the piecemeal rate and the number of items he worked during overtime. That piecemeal rate, you get to 1.5 times it to come up with the pay. Rosen is paid to inspect shellfish and is paid 8 cents a case. He inspected 6,897 cases in 43.5 hours. She inspected 423 cases in overtime. Again, we take that number at the rate per case and then figure out how many hours she worked to come up with an hourly rate. We come up with the premium, the 0.5 of the $12.68 hourly rate, and then that extra amount above and beyond the 40, the 3.5, she is given some premium. Or you can do it based on the work she did for the overtime and the money per case. You add the 1.5 on that amount she did overtime. Special incentive plans are modifications of this piece rate. It allows people to work harder. a little more complex in doing that. In this case, Sam sold $40,000 of product. His quota was $31,500, so he gets 2% above his quota, and his annual base salary is $30,000. So the $30,000 divided by the 26 weeks gives the base earnings. Then you figure out what his quota is. Anything above it, he gets 2% in excess. So the base earnings plus that commission gives him his gross. Again, non-discretionary bonuses are part of wages. Discretionary bonuses would not be. And so when Jamil earns $13.50 per hour and he has earned a safety performance bonus of $85, then you would just take the hours, add his overtime hours, and also add his bonus to include in his pay. Profit sharing plans are ones which employees share in the company's benefits. They can go into their retirement, they can be received in cash, or be received in stock. Okay? Here, Catherine's a non-exempt employee and has an agreement with her employer to work 36 hours a week. In the previous week, she worked 45 hours. How many hours of work are considered as overtime hours? Well, it would be 5. It's only above and beyond the 40 hours work. So guys, this in a nutshell covers Chapter 2. I hope this has been helpful. Have a good week.